Hello students and welcome to the lecture. So students, as we know that we are covering the banking awareness practice questions, and so far we have covered 50 questions divided into 25 questions of each part 1 and part 2. This is going to be our part 3. In this again we will do some practice questions. We will see their answer and detailed explanation. Some of the questions will be the questions that we have covered in the theory. Some will be the new questions that we will learn from. I hope you have revised the previous two lectures in the well enough manner before you proceed for this lecture. It is for your own benefit. So let's begin with the lecture. And basically in this, we are covering the practice questions, right? So in this lecture also, we will do the practice questions and at last we will see their summary. All right. But before starting this, as usual, we have our small disclaimer over here that we are required to understand first. So the disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the image. So the first question you can see, in terms of credit card, what is a hot card? To answer this, you have 10 seconds. Time starts now. Okay, the time's up. The correct answer is C, stolen card. Explanation. Hot card refers to a credit or debit card that has been reported as lost or stolen. When a card is marked as hot, it indicates that the card issuer has flagged it to prevent any unauthorized transaction. This status is crucial for protecting the cardholder from fraud and ensuring that no transaction could be processed using that card until it is deactivated or get replaced. Question number 2. What is the main business of systematically important core investment company, CIC and DSI in India? To answer this, you have 10 seconds, then I will give you the answer. Time starts now. Okay, the time's up. Correct answer is A, acquisition of shares and securities. Explanation is, systematically important core investment companies in India primarily engage in the acquisition of shares and securities. These companies are categorized as non-banking financial institution that focuses on investment in the equity of the other companies, often holding a significant stake. Their primary business model revolves around making strategic investment in various sectors, including infrastructure, but they do not primarily function as lender or financing entities for infrastructure projects or physical assets. Now, question number 3. What is the cap on loan amount given out by non-banking financial company or microfinance institution? NBFC or NFI? Options are 50,000, 60,000, 70,000, 75,000, none of these. To answer this, you have 10 seconds. Time starts now. Time's up. Correct answer is A. Explanation is purpose of microfinance. NBFC MFIs aim to empower marginalized communities by providing them with access to the credit for income generating activities. Keeping the loan amount capped helps prevent over-indebtedness among borrowers. After this, regulatory framework. The 50,000 limit aligns with regulatory guidelines laid out by the Reserve Bank of India for NBFC MFIs. This regulation helps in maintaining responsible lending practices within the sector. Focuses on sustainability. By limiting loan accounts, NBFC MFIs could ensure that borrowers take on debt they could realistically repay, fostering financial sustainability both for the institutions and the borrower. Question number 4. Which of the following are the parties in factoring business? Buyer, seller, buyer and seller, buyer, seller and financial institution, none of these. Again, 10 seconds you have. Time starts now. Okay, the time's up. Correct answer is D. Buyer, seller, and financial institution. Explanation. Factoring involves a financial transaction where a business, the seller, sells its account receivable invoices to a third party, the financial institution, often called a factor, at a discount. Like if we try to understand each party, the seller, this is the business that has goods or services rendered and has outstanding invoices. The seller sells these invoices to the factor to receive immediate cash. Buyer. The buyer is the customer who owes the money on the invoices. They will eventually pay the factor instead of the seller once the invoices are sold. Financial institution or factor. The entity that purchases the account receivable from the seller. The factor provides immediate cash to the seller and then collects the money from the buyer when the invoices are overdue. Now, next question is question number 5. What is the minimum tenure of deposits to be taken by NBFCs? 6 months, 12 months, 2 years, 3 years. Hide answer 12 months. None of this. 10 seconds you have. Time starts now. Time's up. Correct answer is 12 months. Explanation. Non-banking financial companies in India are regulated by the Reserve Bank of India. There are specific guidelines regarding the tenure of deposits that they could accept. Accordingly, these regulations, the minimum tenure for public deposit that NBFCs could take, typically set at 12 months. This requirement ensures a certain level of stability and security for both the depositor and the financial institution. While NBFCs may offer deposit with tenures longer than 12 months, they could not accept deposit for a shorter period than this. Hence, option B is the correct answer. Question number 6. Which of the following is not a money market instrument? National Savings Certificate, A3 month certificate of deposit, Treasury bill with 7 days to maturity, 14-day repurchase agreement of Treasury 8% 2007. None of this. Again, you have 10 seconds to answer, then I will give you the answer. So your time starts now. The time's up. Correct answer is National Savings Certificate. Explanation. Money market instruments are typically short-term financial instruments with high liquidity and short-term maturities, usually less than 1 year. Options could be analyzed as follows. First, National Savings Certificate. Saving instrument issued by the government with a fixed maturity period typically longer than 1 year. Therefore, they are not considered money market instrument. A3 month certificate of deposit is a short-term financial instrument, qualifies as a money market instrument. A treasury bill with 7 days to maturity, short-term government securities and fall within the money market category. 14-day repurchase agreement of treasury 8%. Repurchase agreement are also money market instruments as they involve short-term borrowings and lending. None of these would be automatically incorrect if option A is correct. Question number 7. All of the followings are money market instrument except certificate of deposit, commercial papers, Indian depository receipt, commercial bill, none of these. To answer this, you have 10 seconds. Time starts now. Okay, the time's up. Correct answer is C. Indian depository receipt. Explanation. Money market instruments are short-term financial instruments with maturities of less than 1 year and used for borrowing and lending in the short term. Like if we talk about certificate of deposit, this is a money market instrument issued by banks that has a specified maturity and interest rate. Commercial paper. It is an unsecured short-term debt instrument issued by corporation, also classified as a money market instrument. Indian depository receipt is a financial instrument used to raise capital in the Indian market by foreign companies, represent shares of a foreign company and are not a short-term borrowing tool, so they are not considered a money market instrument. Commercial bill is a short-term negotiable instrument used to finance trade transactions, qualifying it as a money market instrument. None of these will be automatically incorrect if any option of them is correct. Now the question number 8. Which is the most active money market instrument in India? Treasury bills, commercial papers, repo, notice money, none of these. To answer this, you have 10 seconds. Time starts now. Time's up. Correct answer is repo. Option C. Explanation. In the Indian money market, repo is considered the most active instrument. Like treasury bills, if we talk about, while T-bills widely used, they are more commonly associated with the government borrowing investment rather than day-to-day money market operation. Commercial papers, also active in the money market, but they are primarily used by the corporations for short-term financing. Repo. Repo market is very active in India, allowing banks and financial institutions to manage liquidity and finance their short-term needs. Repo involves the sale of securities with an agreement to repurchase them at a later date, makes them a critical instrument for liquidity management. Notice money refers to a short-term loans with maturities between 2 to 14 days. While it is used, it is less active compared to repo. None of these. Again, the same principle will be applied. Question number 9. Which of the following segments of money market is indicator of day-to-day interest rate? Term money market, call money, notice money market mutual funds, commercial bills, none of these. To answer this, you have 10 seconds. Time starts now. Time's up. Correct answer is B. Call money or notice money market. The call money market and notice money market segments of money market deal with the very short-term borrowing and lending. Like first is the term money market. Involves loans for a period longer than 14 days and does not reflect daily interest rate as closely as the call and notice market. Call money, notice money market. Call money market involves overnight loans between banks, while the notice money market deals with loans for a period of 2 to 14 days. These markets highly active and sensitive to changes in liquidity, making them a key indicator of day-to-day interest rates. Money market mutual funds. These funds invest in money market instruments. They do not directly reflect day-to-day interest rates. Commercial bills. Used for trade financing and have longer maturities, so they do not serve as an indicator of daily interest rate. Okay. Question number 10. Which among the following could be used to channelize surplus funds from savers to institutions for short-term use? Stocks, bonds, debentures, commercial papers, none of them. To answer this, 10 seconds you have, then I will give you the answer. Time starts now. Okay, time's up. Correct answer is commercial paper. Explanation. Commercial paper is a short-term unsecured promissory note issued by corporations to raise funds for a short period, typically up to 270 days, often used to meet short-term liabilities and could effectively channel surplus funds from savers, investors to the institution companies that need short-term financing. Thus, the best option for channeling surplus funds from savers to institution for short-term use is commercial paper. Question number 11. Cross-selling is not effective for which one of the following products? Debit cards, saving accounts, internet banking, pension loan, personal loans. To answer this, again you will have 10 seconds. Time starts now. Time's up. Correct answer is pension loans. Explanation. Cross-selling refers to the practice of selling additional products or services to the existing customer. Some products are more conducive to cross-selling than others. Like if we talk about pension loans, these are specific financial products that generate not as common for cross-selling. Pension loans typically tied to specific eligibility criteria like age and retirement status are not a standard offering for all customers. Therefore, they are less likely to be cross-sold effectively compared to the more general products. Given the analysis, pension loans is a product for which cross-selling is not as effective. Question number 12. What is wholesale banking? To answer this, again, you have 10 seconds. Time starts now. Okay, the time's up. Correct answer is A. It is a bank-to-bank or B2B dealing. Explanation. Wholesale banking refers to the financial services that are provided by a bank to the large entities such as corporation, other banks, government agencies. Typically involves larger transactions and services. First is corporate banking. Loans, credit, treasury service, and other financial products tailored for corporations. investment banking, underwriting, facilitating mergers and acquisitions, and market making activities. Trade financing, providing services related to the international trade. Foreign exchange services, currency trading, and risk management. In contrast, the retail banking refers to services aimed at individual consumers such as saving accounts, personal loans, and mortgages. Question number 13. What is hot money? Money which has tendency to migrate towards high profit oriented places. Money which has tendency to migrate towards low profit oriented trades. Money which has no interest, only A and B, and only A and C. Again, you have 10 seconds to answer, then I will give you the answer. So time starts now. Okay, the time's up. So the correct answer is A, money which has tendency to migrate towards high profit oriented places. Explanation. Hot money refers to the capital that moves quickly between financial markets or institutions to take advantage of high interest rate or profit opportunities. Money which has tendency to migrate towards high profit oriented places accurately describes the hot money as it seeks out the best returns and could move rapidly in search of higher yields. Question number 14. The set of directive principles issued by the central bank of a country or process they adopted by it to control the supply of money, availability of money, cost of money or rate of interest, etc., in order to bring stability and growth of economy, commonly known as monetary policy of the central bank of the country, budget of the government, profit and loss account, business policy of the account, none of these. To answer this, you will have 10 seconds. Time starts now. Okay, the time's up. Correct answer is A. Monetary policy of the central bank of the country. Go by explanation. The description provided refers to the monetary policy. It's a set of actions taken by the country's central bank to manage the money supply and interest rate to achieve macroeconomic goals such as controlling inflation, consumption, growth, and liquidity. Central bank uses various tools to influence the availability and cost of money in the economy, helps maintain economic stability and growth. Question number 15. Higher provisioning dragged down the profits of down the fourth quarter of some banks. It was in the news, some major newspaper. This means that the banks had many NPAs, had no NPA, was in great loss, was not able to earn any profit last year, none of this. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is A. Had many NPAs. Explanation. When bank faces a higher level of provisioning, typically means that they are setting aside more funds to cover potential losses from NPA. NPA are loans or advances that are in default or in arrears. Banks have a significant amount of NPAs. Must increase their provisioning to safeguard against potential losses, which could significantly impact their profitability. Therefore, the most accurate interpretation of statement is that the banks had many NPAs. Question number 16. When the Reserve Bank says that the rupee is overvalued, it means options. A. RBI has shortage of hard currency and has to order for printing of new notes to press concern. Rupee is appreciating against other currencies, whereas other currencies are weakening against US dollars. Money is locked in banks and people do not have enough to make their day-to-day purchases. It is a strategy which brings down inflation. More and more people are selling their stocks. As a result, stock market may crash as there is no hard cash for such voluminous transaction. Then none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. The correct answer is rupee is appreciating against other currencies, whereas other currencies are weakening against US dollars. Explanation. When the Reserve Bank of India states that the rupee is overvalued, indicates that the rupee exchange rate is higher than what would be considered its fair market value. Often means that the rupee is appreciating against other currencies, making Indian exports more expensive and imports cheaper, which could negatively impact the trade balance. Question number 70. IMPS stands for interbank mobile payment service, interbank money payment service, interbank mobile payment system, or interbank money payment system, or none of them. To answer this, again, you will have 10 seconds. Time starts now. Okay, the time's up. Correct answer is interbank mobile payment system. Explanation. IMPS stands for the Interbank Mobile Payment System, real-time electronic fund transfer service that enables users to send and receive money instantly through mobile devices. Launched by National Payments Corporation of India, IMPS facilitates secure and immediate money transfers, making it a popular choice for digital transactions. While option C also contains similar wording, the officially recognized full form is Interbank Mobile Payment Service. Question 18. In which year was SATHEE established? 1975, 1998, 1990, 1978, 1981. To answer this, 10 seconds you have. Time starts now. Time's up. Correct answer is C, 1990. Explanation. It was established in 1990 to promote and finance small-scale industries and support the development of small businesses in India. Question number 19. National Rural Credit Stabilization Fund. Institution of purpose specific fund in which of the following? IDB, SIDB, NABARD, IFCI, AFCI. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is NABARD. National Rural Credit Stabilization Fund, NRCSF, managed by NABARD, National Bank for Agriculture and Rural Development. Fund aims to provide stability to rural credit by addressing issues related to the credit flow and ensuring the availability of funds for rural development. NABARD plays a crucial role in supporting agriculture and rural development in India. Question number 20. Which among the following statements incorrect regarding the regional rural banks? They have been established as per the provisions of RRB Act 1976. Every RRB is sponsored by commercial banks. Commercial banks need to approach to the state government to establish regional rural banks. Regional rural banks may often branches in notified area. All statements are correct. To answer this, again you will have 20 seconds. Time starts now. Time's up. Correct answer is C. The commercial bank needs to approach to the state government to establish the regional rural banks. While the regional rural banks indeed is sponsored by the commercial bank, the establishment of RRB does not require commercial banks to approach the state government. Instead, the RRB is established by central government under the provisions of RRB Act 1976 and they are intended to serve the rural population. Question number 21. Which among the following is the correct statement? Cooperative banks fully controlled by RBI, cooperative banks partially controlled by RBI, cooperative banks not controlled by RBI, cooperative banks fully controlled by the Banking Regulation Act 1949. None of these. 10 seconds you have to answer. Time starts now. Time's up. Correct answer is B. Cooperative banks partially controlled by Reserve Bank of India. Explanation. Cooperative banks in India operate under the framework of the Cooperative Society Act, also subject to the provisions of Banking Regulation Act 1949, as amended. Their regulations control not as extensive as that of commercial banks. These are partially controlled by the RBI. This is correct. RBI has regulatory powers over them, but they also operate under cooperative legislation. Question number 22. Agency functions of the commercial banks are primary functions, secondary functions, tertiary functions, social functions, none of these. To answer this, you will have 10 seconds. Time starts now. Time's up. Correct answer is social function. Question number 23. Which among the following is an essential feature of commercial bank? Providing locker facilities, dealing with credit, providing business information data, underwriting, sale of securities. 10 seconds you have to answer. Time starts now. Time's up. Correct answer is B. Dealing with credit. Explanation. Essential feature of commercial bank in its primary role in dealing with credit, like providing locker facilities. While many commercial banks offer local facilities for safe deposit of valuables, that is not a core function of a bank. Dealing with credit. This is a fundamental aspect of commercial banking. Banks primarily accept deposit and provide loans. Effectively managing credit in the economy includes evaluating creditworthiness and managing risk associated with lending. Providing business information data. Banks may offer advisory services information. This is not an essential feature of their core function. Underwriting refers to the process of evaluating, assuming the risk of issuing or insuring the securities. More characteristics of investment banks rather than commercial banks. Sale of securities. While commercial banks may engage in trading or selling securities, it is not a defining characteristics of their operation. Question number 24. When a person has a saving account in the bank assumes a position of debtor, creditor, agency, depositor, agent. To answer this, 10 seconds you have. Time starts now. Time's up. Correct answer is debtor. Explanation. When a person has a saving account in the bank assumes the position of debtor because it owes the account holder the amount deposited along with any interest earned. In this relationship, the account holder customer considered the creditor because provide funds to the bank. The bank is a debtor because it has an obligation to return the deposited funds to the account holder upon request. Therefore, in this context, when a person has a saving account, the bank assumes the position of debtor. Question number 25. Which among the following is the bank rate? The rate at which a commercial bank lends to its customer, rate at which a commercial bank lends to its best customer, the rate at which a central bank lends to commercial banks, the rate at which a commercial bank lends to central bank, the rate at which a commercial bank accepts deposits from its customers. To answer this, you will have 10 seconds, then I will give you the answer. Time starts now. Time's up. Correct answer is the rate at which a central bank lends to the commercial bank. Explanation. The bank rate is the interest rate at which a central bank, like the Reserve Bank of India, lends money to commercial bank. The rate is crucial for monetary policy as it influences the interest rate that commercial banks charge their customer for loans. Thus, the bank rate is specially defined as C, the rate at which a central bank lends to the commercial banks. So here we have finished the questions. Now let's see whatever we have learned. We have learned about hot card, core investment companies, NBFC MFI loan cap, parties in factoring business, minimum tenure for NBFC deposit, non-money market instrument, most active money market instrument in India, indicator rate to the interest rate, channeling surplus funds, cross-selling ineffectiveness, wholesale banking, hot money, monetary policy, higher provisioning impact, rupee overvaluation, IMPS, CTP establishment year, National Rural Credit Stabilization Fund. Indirect statement about RRBs, cooperative banks control, agency functions of commercial bank, agency features commercial bank, bank position saving accounts, bank rate definition. Okay. So with this note, we have finished this lecture. It is requested to all of you. Kindly revise all the facts and figures that we have discussed in this lecture. Keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.